Hello everybody and welcome to today's video about the Q1 earnings 2023 of SoFi. So I first want to start reviewing the strategic objectives. Strategic objectives for SoFi include data on customers, and I believe it's the more important objective to look at when you're investing for SoFi in the long run and when you're a long-term shareholder, which is what I am in SoFi. And when I look at the members, I see that they are still growing at 46% quarter over quarter. Usually when I follow a stock on the channel, I do a quarter over quarter and I look at quarter over quarter growth. But if you go back to my old videos on SoFi, you know that I am expecting a slight deceleration from quarter to quarter in the numbers, because at 5.6 million numbers, SoFi is hitting the law of large numbers for a fintech, and this company has the objective to be one of the top 10 financial institutions in the US within the next 10 years. And to achieve that goal, they are going to hit that wall, that law of large number wall. So the fact that the growth is still decelerating is okay, because when you look at 46% year over year, all right, so you might have 40% next quarter, 37%. It will get to a point to where the growth in members will become lower, but the cross-selling of products to these members will become higher, and that's part of the thesis as to why I invest in SoFi. I think the deceleration of these numbers in members is not concerning at all. It is rather normal, given that we have 5.6 million members. That's a whole lot of people. So let me move on to products. The product growth is still doing very well at 46% year over year new products added, and the cross-selling, in my view, is just going to keep working and keep increasing for SoFi. As far as the lending and financial products that they are also showing great growth at 24%, which is fascinating. They have been issuing more lending products. That year-over-year growth has actually increased for lending products, and I guess that's what a recession does. And the financial services product has had stable growth. We're at 51%. That side of the business is also hitting the law of large numbers, but in my view, these growth numbers are still stellar, and you know, the envy of I think of a lot of the competition. And this is for the strategic objective of the SoFi Bank. Now, I want to show a bit of a negative here, a bit of a not a red flag, but let's call it like an orange flag, which is the Galileo accounts, which they have shown a decline this quarter. And we actually knew this because they had stated that a major customer was leaving. But nonetheless, I believe this is a negative if you're investing in SoFi for Galileo. I am not. I know a lot of people are very excited about Galileo and the narrative around Galileo, which is the Amazon of fintech, which is a interesting narrative. But I think that's a secondary reason why you own the stock. I would be much more concerned if I had seen, say, a decline in the number of members. Now, that would be concerning to me. But this, okay. So they lost one customer. They will likely gain it back. I think it's tougher right now to gain new customers in this macro environment. And as a result of the slight decline in the main business and the starker decline in the Galileo accounts, they are still showing quarter over quarter growth in revenue and in adjusted EBITDA, but perhaps not as high as we would have hoped. And I think this is a short-term movement. This is due to the fact that they lost that Galileo customer. But again, how concerning is this? I do not think it is that concerning. To me, the thesis is still intact and not busted at all. And in fact, I am being confirmed that the thesis is still intact by the guidance that they gave us. Now, you know, whenever they give me long-term guidance, I much prefer long-term guidance. That is all I look at. And we can argue about Q2 and, you know, whether it's good or bad guidance. It was good, by the way. But what's important to me is the full year guidance, and the full year guidance for this stock has increased. They were guiding between 25 and 30% growth the prior guidance given on Q4 in 2023. They are now upgrading this guidance up, guiding between 27 and 31% growth, right? So you can see 1955 is up from 1925 at the low end, and then 2020 is up from 2000 thousands, right? Sorry, 2000 millions. It's up. It's up, right? So in both cases, the guidance is up for revenue, which is wonderful. And the reason why I go through low end and high end and point out that it is up on both sides is because sometimes a company will try to cover their tracks, and they'll try to decrease the guidance by increasing the range. This is not the case. This is just a clear increase in the guidance, and the same is true for adjusted EBITDA. You can see both numbers, the low end and the high end guidance, at 268 above 260 and 288 above 280. So SoFi has increased its guidance both on adjusted EBITDA, which is a proxy, somewhat of a proxy for cash flow, and on net revenue, which is wonderful. So, in conclusion, SoFi, as expected by many of people on YouTube and me and some analysts, they've had another triple beat. Revenue achieved was 460 million. EPS achieved was 0.05. That's a B2, and the guidance was revised upward, like I showed. So they achieved 460 million. They achieved minus 0.05, and I forgot to add the number. I was making the slide, didn't add the number here, but you can look at the number. It's a beat. All three of them is a beat. And however, if you're invested in the stock for Galileo, yes, you may consider this quarter poor. But Galileo is icing on the cake. And I'll just finish by saying that, of course, right now, this is something we've seen in SaaS. B2B sales are tougher right now, in my view, than B2C sales, especially as a lot of customers are looking for this higher savings account rates, and SoFi becomes very attractive if you're trying to earn more of your accounts. But B2B sales right now are a little tougher because of the macro environment, so not too worried. I will conclude by discussing the stock price. And all I have to say about the stock price is that for a stock that is so highly owned by retail and with a small market cap, at $5 billion market cap, it's just impossible to predict. If I had seen this quarter, I would think the stock would have been up, but it's down. So I guess now the market is upset about Galileo. I guess they found something. The market has found something to nitpick on. But that's why I'm a long-term investor. You really can't predict the short run. It's really not possible. If you look at the history, though, of rises after earnings, it usually takes a few days for the market to digest SoFi earnings. So we'll really see. But over the short term, we are blind. Over the short term, we can't predict a single thing. At least I can't. Maybe some people can, but I can't. One of the only thing that I'll say is that banking right now has a little bit of an odd trading day, and that is all I will say. And that is because JP Morgan has purchased First Republic. They've been allowed to purchase it. I don't know how that's possible. It's like typically M&A, once you're a certain size, you can't do it, but they were able to do it. So I don't know, but that creates a lot of turmoil in banking. And obviously, SoFi is a technology company, yes, but it's also a bank, and so that might have an impact on that. You can see a lot of regional banks are way down today, and that's obviously not related to their earnings because SoFi reported, but many of them didn't. So we'll see how this goes. Let's leave it a few days. In any case, I'm not changing anything about my SoFi stock, not adding, not selling, just keeping the stock for many, many years to come. And that was it. No investment advice. This is just entertainment. Appreciate your likes. Appreciate your subscribes. Have a wonderful day.